time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regardless, dear, it's all downhill from here. Remember life, remember how it was. I'm cheap, Michael Jackson, all this shit. Say what up to Becky, the shoe. Say what up to Benny. Say what up to life and my title. Running up my bikes, running up. Not for me, 18, still in granny 6. Give me something sweet, which I might like immortality. This is life, life, immortality. That's the way every day goes. Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regardless, dear, the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south, up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above, regardless, dear. It's all downhill from here.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 14th, 2023. And welcome to the 2023 crypto bull market. This is an official invitation, all right? We're going to talk about why, for many people, and actually, technically, for the crypto markets in general, not for Bitcoin, okay? Bitcoin's been in a bull market since January 1st, 2023. But for the crypto market at large, for the average market speculator, market participant, this is indeed the beginning of the bull market, okay? We're going to talk about why that is. We're going to talk about what that means, what we can expect, how long we expect this to go for, all that stuff, all right? So if that interests you, then keep tuned in. Hope you're all doing well. It's a very nice and sunny day in the DC metro area. All right. Hello, Akanksha. What's going on? Akanksha says, my money don't jiggle jiggle. Yes, it folds. Indeed. You know, with this bull run, and we're going to talk about that a little later, you know, sort of in some weeks' time, towards the end of the run. But yeah, towards the end of the run, your money won't jiggle jiggle anymore. It'll definitely fold, for sure. All right, let's start off with Bitcoin. So on the daily time frame, you know what's really clear is the fact that we've made this elusive higher high, okay? I want you to look at this right here. This inverse head and shoulders, right? Inverse head and shoulders. You can look it up. Always, I encourage you, do your own research. You know, don't take anybody's word for it, my own included. You always, in order for the information to really be integrated properly, you have to trust it 100%, and part of trusting it 100% is doing the research, seeing it's real, seeing it's actually accurate, okay? But anyway, the inverse head and shoulders is a reversal pattern, okay? It's a bullish reversal pattern. The regular head and shoulders is a bearish reversal pattern. Okay, these inverse head and shoulders tend to break to the upside. They're confirmed by a break above the neckline, and, very important, and a retest of the resistance, okay? So, again, inverse head and shoulders, this is the pattern that you're putting in towards the bottom of the market. Let's zoom out for a second. Okay, you see that this is quite clearly the previous uptrend or the previous bull run, right? And you did all of this, which in Elliott wave parlance we call a regular correction, a flat correction. Okay, an ABC flat correction. So you put that in, and after about 650, 700 days, you know, of the correction and the consolidation reversal pattern, you start to put in a new impulse. Okay, so when I say that the bull market started in earnest in January of 2023, I'm referring to the fact that this consolidation reversal pattern that we have in this magenta falling channel was actually completed in January of 2023 or December 31st of 2023, thereabouts. And you can quite clearly see it if you look at the price action. The character of the price action changes in such a way that you start getting an impulsive move. Okay, you go from consolidation, accumulation to impulse. That's the markup. Now, although the bull market started here, technically, all right, for us nerds, us professionals, like really serious investors who are paying attention to the markets day in and day out, for the average investor, the bull market only starts after serious resistance is broken, retested as support, and they see a higher high. Okay, this is the higher high the average investor is looking for right here. Okay, it goes higher than the previous highs created by the accumulation period in the bear market. Okay, so a lot of people talk in terms of higher highs and higher lows, although we know if you're really into technical analysis, it's not about making the higher high or the lower low or the higher low or whatever. It's all about breaks and retests. Breaks of support, retests as resistance. Breaks of resistance, retests as support. That's your confirmation, not the fact that it went higher. Okay? So, in this case, this is exactly what people are looking for and exactly why many more people will acknowledge the fact that this is a veritable bull market. Okay. Now, that being said, we understand that on the smaller time frames, just because you break it doesn't mean you don't retest it. You have to do that for this to be true. So wait for that retest whenever it comes. It's most likely going to come once you reach the next level of resistance, which should probably be around here, yeah? What do you see? Okay, let's put in boxes because I always say resistances and supports are not lines. They're not discrete like dollar amounts. They're zones. Okay, so let's be consistent here. So it would be something like this. Don't be surprised if you get to the 30K region and at that time you put something in. Where's my pen? You put something in to come back here. This could also happen lower, okay? I don't know. And for most of you, it shouldn't matter. It shouldn't matter because this shouldn't scare you and this shouldn't change your larger trading thesis. Your larger trading thesis is that this is the beginning of the bull market. So you make every preparation so that you're well exposed for what comes next. This is literally of all the different phases of the market, okay, of which you can say there are three. There's an accumulation phase, or you could say 3 or 4. There's a distribution phase, there's a drawdown phase, and then an uptrend phase, okay? Drawdown phase is what we're in. The accumulation is what you saw at 65, 69K, okay? The distribution 65, 69K. The accumulation, which you just saw here, was the 15 to 20K, okay? There are those phases of the market. This phase that we're going in right here is the most lucrative. This phase, of all the 4 phases of the market, okay, if you consider the 4 phases as I just depicted, is the most lucrative phase of any market. Why? It's not just that it's impulsive, because you can also make money when you're going impulsively down. You can make money scalping in and out, right, in these distribution or accumulation phases, but it's harder. Where most people make their money is this up only or impulsive up phase. Why? Because you don't even need to expose yourself to leverage or margin or kind of like options or anything like that. You can simply buy and hold. So most people are going to make money here. Most people are going to enjoy gains from this market in this part of the cycle. Okay, so this is the part of the cycle that we've been waiting for, and it took a long time, and it doesn't come every day. So if you're listening to this right now, congratulations. Congratulations. You know, you've heard of crypto. If you're new, this is what we've been waiting for. If you just came, you're really lucky. And if you've just gotten exposed, you're literally going to experience something you've never experienced before. It may even be ruinous, because sometimes you have people come into the market at just the right time. They make a decent amount of money, but they have no idea when to take profit or how to take profit or what to do, how to read the charts or when to even, what to do with the money, actually. It's kind of like lottery winners, right? In any case, this is where we're at, right? This is the bull market. It's undeniable. Technically, people who say it's not yet the bull market because, the 4-year cycle states that blah 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 blah. We don't you don't bottom in the 4-year cycle. The next halving event of Bitcoin doesn't occur until 2024. So anything right now is not really the bull market. It's just a little uptrend. They have no idea what they're talking about. Look at the technicals. You have a rounded bottom at the bottom of a market, right? You look for bottoms and tops. Bottoms and tops are rounded, okay? So a lot of times you see these reversal patterns, inverse head and shoulders on the bottom. This inverse head and shoulders in particular breaks the neckline, retests. This is the confirmation. But again, you had 300 plus days to observe this pattern and observe the fact that we're in a falling wedge and observe the falling wedge breaking resistance, retesting it as support, all that stuff, okay? Now, although Bitcoin is clearly in a bull market, and Bitcoin was clearly in a bull market in January of 2023, it's a little bit ahead of other assets. Let me give you an example. All right, if you look at something like Chainlink, okay, it is just starting its bull market. Why? Because look at the chart. This accumulation that we have now in a blue channel is the bear market accumulation. Okay, just zoom out for a second. If you're not familiar with this chart, you can see Chainlink went up and came down in 3 waves, okay? So you go up in 5, you come down in 3. This is what we expect. At the bottom, so this is the up only phase. This is the distribution phase. I hate when this, okay. Distribution phase. This is the down only phase. This is the accumulation phase. You're waiting for the up only phase. You have yet, unlike Bitcoin, you have yet to break the accumulation box, okay? You have yet to break the accumulation box. And so you're still kind of in that mire of price action. And you can see that really clearly here. If we go on the daily time frame, Chainlink has been in this box for hundreds of days. More specifically, about 300 days, okay? 300 days, and there have been 0 impulses yet, okay? This is actually the beginning of an impulse, so expect this to come up, retest this as support, okay? Breaking resistance, retesting it as support, then going on. Bitcoin's already on wave 3. Chainlink has yet to print wave 1, okay? For those people in, that may not be able to read charts, who always say Chainlink pumps only in the bear markets, so typically doesn't go in the bull market, blah, 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 blah. Just because it happened two times prior or 1 time in the past doesn't necessarily mean that that's always going to happen. Be careful about that. Lots of those narratives, lots of those tropes in crypto. But it's 2023, we have TradingView, we have tools, we have the education, we have enough understanding and ability to get away from those kinds of things, to get away from the narratives. First Bitcoin pumps, then the money transfers to Ethereum, and then it transfers to altcoins. Like, I studied that when I first came into the space because I thought that was true. I thought that's how things worked. And there were literally people buying Bitcoin and thinking, oh, I got a ton of profits from Bitcoin. What else is great? Let's actually now invest in... It doesn't work that way. It doesn't work that way, okay? Don't be naive. And this is why you read the charts and do your own research. Don't let somebody on some big channel tell you this is exactly what to do. And if you want to beat the system or you want to invest well, you first buy Bitcoin, get profits from that, sell into altcoins, or sell into Ethereum, get profits from that, sell into other lower cap altcoins. No, that's stupid. Because look, there are certain assets that are up massively that are really small cap, right? It has nothing to do with, that narrative. Do you understand? Although Bitcoin is up more than a lot of assets, but that doesn't necessarily mean it's up more than all the other assets. And no, it doesn't go by narrative of like, AI and then this and then that pumps and that pumps. Like, forget about it. Just look at the chart, do the analysis, and everything's going to be a little different, but this is how you can speculate more accurately and more precisely. Get away, if you really want to do it well, get away from those confusing narratives. I promise you I had headaches trying to wrap my mind around how it worked. I went on I remember on Twitter, being on Twitter, looking at I forget the account, but it's an account with like a ghost with a hat, the yellow hat. Market, I forget, but basically he breaks it down. He's like, I've been in like 2 cycles and this is how it works. And then like it got his whole market trading thesis was amplified on different channels, on different YouTube channels, and pretty much everybody was like, oh, that's how it works. Like, no, just look at charts, guys. In any case, my point in saying all this is that although Bitcoin is very clearly in a bull market, Bitcoin's very clearly in a wave 3 Elliott wave of this impulse, some assets like Link, like we just looked at, are not as far along. And you can see that very clearly in Bitcoin dominance. We looked at this yesterday. What is Bitcoin dominance doing? Well, it's essentially putting in a flat correction, okay? You can call it a bear flag, but you had your impulse here, and all of this is corrective. It's a massive corrective wave. You can see it just by how it moves. It's kind of sideways. It's struggling to make any positive uptrend, and it's just been sideways and choppy for the longest time. Okay, so do expect, what is this? This is probably an ABC right here, right? 3, 1, 2, 3, 4, 5. Okay, and then you're gonna get some distribution and then a drop down. And if you look at this right here, so I'm going to explain what this means in a second. Let's lengthen this right here. This is likely, is it still a zigzag? No, it can't be a zigzag. It's got to be a flat correction. Why? Because flat corrections come to minimum 786, zigzags come to a maximum of 618. So it broke the 618 here, so it's targeting the 786, maybe the 886, 914. In any case, this is a flat correction. Can no longer be a zigzag, but it's still a bearish pattern, okay? And what does it mean for Bitcoin dominance to be bearish? It basically means that altcoins are going to gain against Bitcoin. So if we're in a bull market, a proper bull market, you're going to see what we call an alt season, okay? So actually, you know what? Let's get rid of this and keep the fib. Let's keep the fib. Let's get rid of this. We don't need this anymore. Here's what we're going to do. We're just going to put a massive flat correction here. Like so. Okay, 786, 886, 914. Most flat corrections end between the 786 and 914. That's why I have it in my Fibonacci retracement levels. And so this is corrective, impulsive. And actually, in a flat correction, it's a 335, right? Or, I'm going to look at this a little differently now. Maybe instead of this being a double 3, you're dealing with a triple 3. Okay, and I'm referring to this particular... Okay, this is probably going to come up here. So Bitcoin's going to continue to rise and gain against some of these altcoins. But most likely when it gets up here somewhere, you get a pivot and you resume. And all of this whole thing that's been since 2021 has been a massive complex correction. It's probably a triple 3. Let's see. Let's count it really quickly. W, right? Where's W here? Let's see. Let's see. I will say W, X, Y. I think this 1, 2, 3 is X2, and then I think this is Z. I think this is it. 1, 2, 3, 4, 5. Okay, I think that's it. Maybe it's shorter right here, but I think this is a triple 3. Once you get this, and remember the context, you're in a massive downtrend. Bitcoin dominance has been in a massive downtrend since 2020, meaning altcoins have been gaining strength against Bitcoin. It makes sense. The space keeps getting stronger. The space keeps getting more mature. More and more altcoins are engendering, welcoming, inviting capital, and that capital is becoming a larger percentage of the entire crypto market space. So it's not unless you're a Bitcoin maximalist and you have these strange ideas about nothing being anywhere close or worth inviting capital outside of Bitcoin, this makes sense, right? The more the space matures, the more assets are likely to gain market share in the entire cryptocurrency space. So this is what you're seeing, okay? And this is a complex correction, and you have one more leg down, okay? This is why this bull run is one of a kind. Obviously, this leg down is not going to happen in just one fell swoop, but the series of bull runs that we experience in this last wave are going to be epic. Okay, they're going to be epic because you're going to have the kind of altcoin seasons that you've never seen before. You're going to have altcoin seasons that you've never seen before, because when it's all said and done, you're going to be breaking this entire head and shoulders pattern down. This is a large reversal pattern. This is a large pattern that's been setting up ever since 2017, and you're finally going to break it to the downside. Okay, and breaking this to the downside yields a historically low Bitcoin dominance. Meaning, when you're gonna, like, in practical terms, you're going to look at the cryptocurrency space, and people are going to talk about Ethereum or a Cardano in the same vein, with the same importance, with the same reverence and respect as they do Bitcoin, perhaps, because that is exactly what the charts are showing. Okay, I don't know exactly, what assets are going to be up there in terms of market cap, but basically the chart shows that at this rate, it's trending down in such a way that Bitcoin becomes less and less important in terms of its overall market share. Okay, I'm not saying that Bitcoin's bad. I'm not saying that Bitcoin's going away. This is just what the chart for crypto market dominance is showing us. Okay. Young Dasa says, "What's up, Dean? How are you?" I'm very well. Young Dasa says, "No more accumulation, indeed." This is awesome. I'm so excited. I've been reading, playing guitar, just doing other things, not stressing over my positions, just watching things go. This is really the best. Conscious says Phantom and BTC charts are and moves look exact. Serious resistance is far along. Yeah. So this is the next thing we're going to talk about. Okay. Let's go back to our Bitcoin chart. And so we understand why this is the start of the bull run, right? We talked about the breaking of this major resistance at 25K, thereabouts. We also talked about making the higher high. For those of you who like to trade moving averages, you'll probably, see that most of your important moving averages are right here, okay? Why? It makes sense. You don't need the indicators to tell you this. For the longest time, this has been resistance, right? For this entire, 300 plus days, you've been right under this level. So obviously, most moving averages are going to be stuck here because the average price has been shown at this level to be here. So if you break it, you go above the average price. Okay, so we talked about the retest of this level. What else did we talk about? Yes. So what's next? So after we break up, we encounter some resistance somewhere, like minor resistance, and we retest. I'm not exactly sure what this retest is going to look like, how high we're going to go. I'm not really concerned. All I know is that this is very likely to happen. High probability move. You're going to go up and retest. You cannot be under. You can't have such a strong resistance, something that proves itself to be significant for 300 days, not break it and retest it. That must be retested. After that, what then? Well, it is blue skies. It's all downhill from there. Why? Because you don't really have anything stopping you until perhaps 40, 45, 48K. This is the next even likely resistance level, right? And at this point, you may just get some sort of small consolidation because you can see it's not a clean level. It's not very discreetly marked where price stops in its tracks when it's above it and below it. Do you see? There's a lot of variance around this level. So it's a relatively weak level in my estimation, but you will get some reaction, some consolidation here before popping up and out, okay? In any case, do you expect this to be the last boss, the final boss, the last staunch resistance for Bitcoin? And so once this is broken and retested, it's already broken. Once it's retested it's duly retested, then it's pretty much blue skies for the price. All right, so that's Bitcoin. This is what we can expect. Now, looking at the DXY US Dollar Currency Index, our main market mover, what we look at as an indication for what the market's going to do, it's clearly putting in some sort of consolidation. Now, is this consolidation eventually going to yield a move up? It's likely. Why? Because we have this gap, okay? And we know these DXY gaps fill like 100% of the time. I've never seen one not fill, okay? So I do expect for us to, if this is an initial break of structure targeting wave 4, if this was a wave 4 of the previous trend, this is big B, this is small a, this is small b, put in a pivot, and then come up, okay? I do expect a retest of this area, okay? And this will essentially be 1, 2, 3, 4, 5. This is probably going to be your wave 2 correction right here. So I'm just going to assume, I'm not exactly sure, but I'm going to assume that all of this is a 5-wave sequence down, okay? and you're looking at a let's just time this real quick. So it's about 4 days and 3 hours, 4 days and 2 hours, say. Let's say 4 days and 3 hours down. And so thus far, it's been 1 day and 14 hours. So yeah, it's likely that this can take its time and go all the way. So we may have consolidation until Friday, it seems, right? Because why am I doing this? For those of you who don't understand, what I'm doing is, in Elliott wave theory, the first and second waves typically take the same amount of time. So if you come down in 5 waves, like so, whoops. If you come down in 5 waves like so, you should come up in the same amount of time in 3 waves. So this would be A wave, all this is B wave perhaps, and then the impulse up should give you, right, your wave C, which is completing the flat correction. Let's just put it in properly, because I think this is a likely scenario for the DXY right here. What am I doing? Something like this. Oh, no. I'm gonna fix that. Give me 1 second. Wave 2 is likely right here. Right there. Okay, so this is what I'm seeing on the DXY. So I'm expecting, just like I said, a correction to take about as long as it took to come down to go up. So we said 4 days and 3 hours, 4 days and 2 hours, doesn't matter. Something like that. So we're going to track this and see. So it should take us around Friday to put this in. And again, we should get the beginning of a move down on Friday and Saturday, and then opening the week next week. So let's just see something like this. Something like this. But yeah, these timings are off because of the gaps. So let me see. This is all off. Okay, let me fix this. 1 second. 1 second. 1 second. Dealing with traditional markets, sometimes I forget that because of the gaps, I can't do my time measures in the same way. So let's just assume it comes back to the 0618 of this. That would definitely fill that gap. But I'm just going to use bars. So we have 50 bars here. I'm going to measure 50 bars. Okay, so that should do something like this. Okay, so it looks Wednesday at 3 a.m. Eastern Standard. So what today is Tuesday. So later tonight, Wednesday 3 a.m. What time is it? It's about 3 p.m. So that's like 12 hours from now. So in the next 12 hours, don't be surprised if in the next 12 hours, according to what we're seeing on the DXY here, and guys, pay attention to the number of bars, not the time, because the time is off because of the opening and closing of the markets. So approximately in 12 hours, according to this calculation, we should get a move up in the DXY, which also takes our risk on assets down. So that correction that we're looking at in Bitcoin and all these other cryptos to retest that major break, those major breaks in resistance, okay, as support, should happen sooner than later. So let's see. Let's look on the smaller time frame. So you can see it's already happening here. Okay. You can see it's already happening here. Don't be surprised. So what you see in a really bullish run, right? When you see a bullish impulse, is you see very tight consolidation. You don't get a lot of variance, right? The consolidation takes the time it needs to take, but it happens in a short range. And the reason that is because there's so much buying pressure that price just doesn't want to come down. You see here, you have a rising channel accumulation. Basically, you had a flat correction, but you never even made a lower low. You put in a running flat. Do expect those kinds of corrections on the way up. So here, let's say, okay, let's zoom out for a second. Okay, this is really clearly the level, right? Right here. This is quite clearly the level. So now that we have that in, and why is it the level? It's because, right, in the past, this was proven to be the level of resistance, and now we're going to turn it into support. Okay, and so let's go on the smaller time frame now to see what that may look like in more detail. Okay, and you can see that happening here. So right here, a retest of this. Okay, now the question is this going to be a W or just an A wave or whatever, an initial break of structure of a larger correction? It's more likely than not. Okay, it's more likely than not that you see some sort of lengthy correction here. That's not just like a quick one, you know, because it's such an important level. So don't be surprised, or if you get a triangle, a lot of times very bullish consolidations come in the form of triangles. Why? Because again, there's so much buying pressure. Like everybody wants to buy, everybody's buying, so the fair market value of the price becomes more and more concentrated, more and more defined. Right there. Okay, so this is what I think is likely for Bitcoin, to have some sort of consolidation, lengthy consolidation on these levels, you know, and based off of our DXY analysis, this may go on for you know, for the rest of the day, at least, you know, until maybe 12, or sorry, for about 12 hours, something like that, but we'll see. Let's look at our, yeah, so don't be surprised if it does this. Let's just put a double 3 in as a placeholder and see. Or no, let's not do that, because yeah, these corrections could look so many different ways. It doesn't really matter. Okay, so that's my analysis for the DXY and Bitcoin on the small time frames. A says Elliott Wave died poor, Wyckoff died wealthy. How is that relevant to anything? We don't really care how much money they had in the bank. We care about the quality of their analysis, right? You can have a lot of money and be a shitty analyst, and that doesn't help us as people that study it, whether they had money or not. You know, Gann was actually the most, if you want to look at the traders that were the most successful, Gann was the most successful. But good luck studying WG Gann. Good luck. You know, it's so arcane. It's so inaccessible. You know, it's not, who cares how much money they had? Like, they all have merits. And if you study them, you can see that they all say essentially the same things. They're not in contradistinction to one another. But, I mean, if you don't see the similarities and if you don't see how they're basically saying the same thing from different angles, then you haven't studied them well enough. If you think they're contradicting one another. Okay, so let's see about... so that was Bitcoin. We did the DXY. We did Bitcoin dominance. I'm just going to say really quickly, for those of you who don't know, given that this is the beginning of the bull run, given that, this is what we've been waiting for, we want to keep a high time frame perspective, right? Not financial advice, but one of the worst things you can do is sell too early. The way you make a lot of money in the bull run is that you wake up every day and you see your asset go up 20, 40, 50, 60%. You wake up the next day, it does the same thing, and on and on and on and on. Obviously, there are some retraces intermittently, but you just let things grow. You let it snowball. You let the gains compound on one another. The way you don't make a lot of money is by taking profits too early or trying to overtrade. I'm speaking from experience. Yes, it's possible to try to trade all the uptrends and avoid all the drawdowns. It's possible, but it's not probable. Reason why, it's because when it starts going, and we haven't really started going in a violent way, once you break this, right? Again, this is your impulse, previous impulse. This is your previous correction. This is your accumulation. Here is your next move. Once you start going and there's less resistance, you'll see how fast and violently things move. You'll see the exchanges that you're typically using during these accumulation or distribution phases. You'll see them go offline. You'll see them run out of supply. You'll see them have outages. It's very, very, very tricky to trade every single last move. And it's actually silly. It doesn't make any sense because half the time, a lot of the moves are going to happen when you're sleeping. So what you want to do is look for high time frame resistances to take profit if you're going to take profit. If not, just wait for the entire run to play out. And the entire run, according to our analysis, is likely to take maybe a couple months, right? So we have this minor wave 3 that I've tracked, and chances are by May, around May, right? Mid-May, end of May, I don't know. But around May, I'm looking for tops. And, obviously I'm looking at this chart. I want to be in these areas. I want to be towards the top of this channel before I'm looking to take profit. I said this yesterday. If I were to take profit any earlier, it would be around this period. Because we know that this period is going to be very serious resistance for Bitcoin. Okay? There's confluence with the midline of this channel and this 12-year resistance, this 12-year parabolic resistance that has always proven to be staunch resistance for Bitcoin's price since the beginning. Okay? So you can see that here. Ever since the beginning. Resistance, 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 resistance. So you are going to get resistance here. Question is, what's the reaction going to look like? Is it going to be a consolidation? Is it going to be an all-out rejection? I believe it's going to be the former. Okay, so this is why, personally, I'm not taking any action on my 30-some-odd assets, on my 30-some-odd positions, because there's just too many, and I'm not giving up my entries. My entries are everything. The fact that if you're still here, if you're listening to this, maybe you are also one of those people like myself that has accumulated during these regions. Like, the last thing you want to do is give up your positions. Even if you get here and you get some sort of reaction here, just let it ride, because eventually you're just going to continue to go up and complete this impulse to the upside. But selling and trying to get back in and trying to make sure, that you can track this impulsive, violent price action is just asking too much, especially if you have a bunch of positions. So that's just talking strategy and what to expect, all right? Obviously, we have a plan, and that's the plan, and that is the strategy based off of the plan, right? If we have no idea where the market's going, if we're just closing our eyes, we're obviously going to take profit at any turn, at any time our VRVP or our indicator 5,000 tells us there's going to be resistance. But we don't want to do that. We understand that bull markets are made for nothing, not doing anything, not trading anything, just buying and holding until such point as you reach the bear market or the beginning of the distribution of the bear market, right? Then you want to take action. But that will be very clear. It'll be very clear when we get into distribution mode, right? Because it'll look something like this. You'll have a lot of time. Don't worry. You'll have enough time. You may get a big drop followed by a big bounce, big drop, big bounce. You'll have time. Don't freak out, okay? And you'll have enough warning based off of the indicators, based off the price action, based off so many things, all right? The DXY. So don't overreact. Just hands off. Enjoy your life. Do whatever you want to do. Learn a hobby. You worked hard. The work is done. All the work was entering the positions here. All the work was holding the positions here, not selling. And now you just wait. Okay? Even if your entry was here, you just wait. Because eventually, you're going to pass. You're likely going to do this right here. You're likely going to pass all-time high, retest it as support, or something like that, and then continue. I don't know what it's going to look like, to be honest with you, but yeah, that's the strategy, and that's why the strategy is as such. Rakshit Singh says, I shorted 100x at 25,800. I mean, that's fine. Everybody's different. If you'd like to scalp, go ahead, by all means. I know some people who, if you read Market Wizards, so I always talk about Jack Schwager, my mentor, who wrote the series Market Wizards, and he basically interviews all kinds of famous and successful traders. They have to show a track record of at least 10 years of positive P&L, right? And if they do, then, he interviews them and he sees, what made them tick. It's very interesting if you haven't read it, and if you're into trading and you want to see, what makes a successful trader a successful trader. Okay, so there are all kinds of different traders. There are position traders, there are scalp traders, there are swing traders, there are only long traders, there are only short traders, there are hedge traders, all kinds of traders, okay? There's this one trader, and there are a few things that they all have in common. They all exercise excellent risk management, except this one guy. There's this one guy who did not, but he was very successful. He worked, I believe, if I recall, at it was a prop firm in New York City. I forget his name, but he was basically the guy who was always trading the counter trend. You know how they always say trade the trend, right? The trend is your friend. And you'd have to be like a crazy, a silly person. Like, you must like unnecessary risk to trade this, right? Let me just give you an example, right? This is clearly trending, right? This is clearly trending. This is clearly trending. This is clearly trending. But there are some people like this guy in Market Wizards, okay? And let me just say, counter trading is bad risk management. Unless it's a hedge in a sideways market, but counter trading in a trending market is bad risk management because you're already taking risk by going against the trend. You're likely, you have a smaller margin for error, okay? And this guy would seek out trending markets and then jump in. Seek out trending markets, jump in. Seek out trending markets, jump in. And some way, somehow, he was successful. And when talking to him, they found out he liked the thrill of being a contrarian and going against. It's like this was too easy for him, and it didn't really. He was like an adrenaline junkie, and counter trading strong trends gave him his like adrenaline boost, and he became like a super trader. It's crazy. Everybody's different, but for the majority of people, if you want to practice good risk management, if you don't want to make it harder than it has to be, and it's already hard enough, just trade the goddamn trend. You can counter trade and be successful, but chances are you're not going to be successful. Chances are you're going to get smoked. So, okay. Rashid says, I'm a short-time trader, just learning trading, a student. I understand it in the long run. Accumulating right now is good because soon we are crossing 40K minimum. Rashid said, did we bounce off 25.2? Are we likely to test it again? I'm up 70% thinking to exit. I don't know, man. Trading is so individual, and I'm not, I can't see your position and, the risk involved, what your margins are. There's so many things. I'm just saying, just be careful. I'm glad you're up, though. I'm glad you're up. Just be careful. I was actually in a really small time scalp short on the weekend, I think. And right before we went off, I got out with my profits and I threw it into my longs, threw into more of my longs. But I haven't taken a short in so long, but I was just bored. So I took, a few small time, really scalp shorts. I think I took one on Bitcoin, and I think I took one on Ethereum. And I got out, and thank God I got out when I did, because then the price just went, But yeah, you just want to be careful. You want to be careful, especially trading against a trend. It takes a lot of skill. It takes a lot of patience. It takes a lot of attention. You have to be on your P's and Q's. But if you're trading the trend, the beautiful thing about trading the trend is it's easy. Relatively speaking, as easy as trading can be. Trading is not easy. But when it comes to, difficulty in trading the trend is relatively easy because, by and large, this is why everybody loves this phase of the market, the up only phase, right? I talked about the 4 phases: the distribution phase, the down only phase, the accumulation phase, and the up only phase. Everybody loves the up only phase. And some people like the down only phase too. But the impulsive phases, let's say, the impulsive phases are relatively easy if you're going with the trend, because chances are, more often than not, you're going to be going up. And that's rare, actually, because most of the time, when you're looking at markets, they tend to be either up, consolidating, or distributing. Seldom are they going impulsively up or impulsively down. Okay. So, yeah, like I said, a rec sheet, I don't know if it's going to look like this. Maybe it looks like this. I would doubt this is it, and then we just go from here. I just doubt it, because this is such an important level. I think it's going to take a little bit of time to consolidate at this level. And what that's going to look like, I don't know. This could be the start of a triangle, right? An ABCDE triangle. It could be a running flat correction, like you got here. It could be a regular flat correction. It could be a double 3. It could be a triple 3. I don't know. And that's, you got to know what you don't know. What kind of correction you're going to get is unknown. So you just track it. But at the end of the day, I think the smart, clever thing is just accumulate. This is meant for accumulation, because this is what you would call reaccumulation in a trend. You reaccumulate because, why do you reaccumulate? You don't always reaccumulate. I know some people say dips are meant for buying. Not always, even if you're in a trending market. And I'll tell you why this is a particularly good time. Financial advice. Does calling financial advice preclude you from being sued? Does that save you? I'm not saying that anymore. I think this is a stupid habit that we've come to we've all come to practice in crypto. Not financial advice. Like, fuck it, it's financial advice. Like, I wouldn't do it. You don't have to take it, and I'm not forcing you to take it, so don't fucking sue me. And if you do, whatever, you'll see. I'm not gonna lose. Anyway, you want to buy this because you've just broken significant resistance and you're retesting it as support. You're not expecting for this to come down back into this region because of this significant resistance broken. This is why I would say it doesn't matter what this looks like. If you're underexposed, you want to increase your exposure here because this is a last chance before a massive move. Because after this, we know technically post 25K, which is, let's turn on, I'm not a 200-day moving average. I know people worship that moving average. I used EMAs, not MAs. I use Fibonacci numbers. But at the end of the day, you should be able to see the same thing. Let's go on the higher time frame. So yeah, on the weekly time frame, you can see this quite clearly. This area right here that we're at is the last bastion. This is the last, then final boss, okay? All your major EMAs on a high time frame are going to be congregating here. And, you don't have to turn on your EMAs to see this. It's simply because this whole entire 300-day accumulation has a neckline at this area. So once we leave this area, it's goodnight, Irene. You're going to the moon, okay? It's quickly teleport to the 40K region, okay? That is why this is a great opportunity to reaccumulate if you're underexposed, okay? Myself, I'm playing guitar, I'm reading books, I'm turning off my computer for the first time in hundreds of days because I don't care. I'm done. All my work is finished. I've done everything. My margins are set. My stops are in profit for the most part. I'm just sitting pretty. I'm waiting my 2 months. I'm going to cash out and buy whatever I want to buy, and fund whatever I want to fund. Okay, Rocksheet says, I exited. It's too volatile to trade higher leverage right now. Oh, yeah, definitely. If you want to take 100x, take 100x long. Obviously, not financial advice. Those are hard to take if you don't have the skill. But, that's what you should be doing. 100x short is kind of, you're an adrenaline junkie. Rakshit says, why are some big traders mentioning that we aren't in the bull run? They claim before the halving there is no bull run. This is just accumulation. Yeah, I've been talking about that, Rakshit. That's my point. It goes back to, I'll just explain it really, really quickly. So this is our larger chart, and this is just people not understanding how the halving affects price. They understand only one thing, that the halving basically halves the reward for Bitcoin miners, and that means mathematically that the supply is reduced, and as a result of reducing the supply, the price is pushed up. Okay, we all know that, but how it works and when it works, they don't understand. And because they're not chart literate, they're obviously not looking at a chart. Or if they're looking at a chart, they're not able to read it. Let me just turn on the halvings right now. What they're thinking is the halving is going to present a bottom, a market bottom, and then the bull run starts. But that doesn't even make any sense, because if you look at all the halvings in Bitcoin's history, just even if you reduce your analysis to just Bitcoin's history, you can see that never happened the first time. Okay, the first halving, we are already in this wave one, primary wave one. Okay, this red wave is called the primary. Okay, you're already halfway into this primary wave one. You were in wave 3 of this primary wave one. Do you see? And the halving happened. So you had already been through almost half of the bull run. The second halving, you've been through almost half of the bull run. The third halving, that happened closer to, this is what a lot of people who maybe just got into crypto, maybe in the past 5 years, they're probably referring to their experiential knowledge of what happened in 2020, where you had this flat correction, right? The COVID crash, what they call it right here, which is essentially just the last leg of this this flat correction, ABC flat correction. It was nothing more, nothing less. And right after the halving happened, so in their minds, halvings are synonymous with market bottoms, which they're not. That, again, do your own research. You can see it in black and white if you look at the chart. But, you know, people don't want to do their own research. They want people to feed them information, right? But you don't do that if you're serious about learning, if you're serious about really making it. So we're going to actually, I mean, the charts show us that it's likely that we go into the bull run. And not only do we go into the bull run, but we come back down for the next halving. Now, it's also possible that the halving I'm just thinking of this. Hold up. I'm having an epiphany. Okay. I've got to concede this. There's a possibility let me just do this. But then there's a possibility that something like this happens, okay? There's a possibility that something like this happens. Where we come up, find resistance in 6 figures, okay? And that first consolidation under this area coincides with the halving, which would then mean that this minor wave 3 takes a little longer than I had previously anticipated. Okay, my previous plan, and this was based off of Fibonacci time, was that we get up here, all the way up here, by May. Okay, and so now this is on the table. There's a chance that that time projection was off, and that instead of, I'm sorry, I want to keep that. I want to get rid of this stray mark. There's a stray mark driving me crazy. It's in there somewhere. Excuse me, guys. Give me 1 second. I'm going to get it. There we go. Okay. So, there's a chance. In either way you slice it, you're going to have already, this minor wave 3 will have started, because it's already starting. It will have started. Whether my time prediction is on or off, this minor wave 3 will have started. So what you saw in the past with Bitcoin, in the first halving, where we already made the first couple waves of this bull run, is likely. Do you see the halving doesn't have like it has to bottom out? No, look. This is just going. This is literally in the middle of wave 3 of 3 of this impulse right here. Right here you're in wave 3 of 3. The halving seems to hit during wave 3 of 3 there. And here the halving hit at wave 3. Okay, it's not out of, I would say, given that we're already in March, and my projection was for February to March, April, you may get something like this. This may take a little longer than expected, but basically what I'm saying is we may get a move up to this really important resistance. Really, really important resistance. Consolidate and then go parabolic for the rest of it. Okay? And that would be wave 3 of this larger move up. So the $1 million Bitcoin, $5 million Bitcoin may be in 2024, not 2023. That's what I'm seeing if all things remain equal. Now, if we go and stay on my original plan and go all the way up and then come down for the halving, because this is a wave 3 as it is, that also won't surprise me, right? Because why did I have this way? It's using Fibonacci time. I just used Fibonacci time. I took the time, this time, the time for this minor wave 1, time for minor wave 2, and then projected minor wave 3 in terms of Fibonacci time. And then also it coincided with this channel and everything like that. But in any case, high degree of probability, this minor wave 3, which we're in right now officially will have started way before the halving. So you will be in the bull run before the halving. Question is, will the bull run be over before the halving, or will you be in the middle of the bull run? It might be the latter. Where you get something like this and then you keep going. Okay, so that's just something to look out for, and obviously we'll be tracking that. And the great thing about doing analysis is you don't have to be right for it to be useful. You can be partially right. You can be wrong in certain aspects, but you can also modify things as you go, as you get more data. So this is what we're going to do. But yeah, to answer your question, the idea that we're not going to go into the bull run before the halving is stupid, because if you look at the past halvings, we've never not been in the bull run as the halving happened. Rick Sheet says, great explanation, subbed you. Yeah, thanks for the sub. All right, so let's see. So we talked about Bitcoin. We talked about our projection, our plan, why we're sitting on our hands, what we can expect on the short time frame. Here, if you just look using your EMAs, you can see your 21 exponential moving average. You're above all your main EMAs on the small time frame. So yeah, this is just you are so bullish. You know, you're above all of your main EMAs on pretty much every time frame. It's except for the weekly. So it's you know, we're getting to that territory where you go to bed and you get up and, you know, something's pumped 200, 300%. It's coming in the coming days. So let's now look at some altcoins, because I think we've covered Bitcoin and the DXY and all the main stuff. Let's look at some altcoins. Let's start off with our first. Let's see. Cardano. All right, let's turn off the MAs. Nothing wrong with them. It's just we don't need them for now. We know we're bullish. Let's do our altcoin analysis on the daily. No, 4 hourly. 4 hourly though. Where's my 89? Here it is. Okay, so yeah, this is just moving. So Cardano is one of those that put in a wave 1, wave 2 situation. Its wave 3 is going, kind of like Bitcoin. Okay, whoops. You can see it's in its wave 3, more likely than not. And once it breaks this, kind of like Bitcoin breaking 25K, do expect fireworks, okay? It's already kind of impulsive, but it's going to be that much more impulsive at that level. But you can see, you know, kind of reflecting what you see in the Bitcoin dominance. Bitcoin's main resistance was here. It already broke it. Cardano is a top 10 altcoin, and it's below that, right? So Bitcoin's a bit ahead. other than maybe Ethereum, everything, Bitcoin's ahead of most altcoins, right? Synthetics, Ethereum, there are a few that are on pace, but Algorand, you can see, same thing with Cardano. You have yet to break that main resistance, but you're headed there. So do expect the altcoins to, with some time, gain strength, gain speed, gain momentum. But does this mean you sell your Bitcoin into altcoins? Like, no, that's goofy. That's goofy because it's not every single last altcoin, as you will see. It's just some. Some altcoins are, like, some altcoins could be ahead, some altcoins could be on pace, some altcoins could be lagging Bitcoin, but there's no, like, you know, hard and fast sort of blanket rule that, you know, ETH, it goes Bitcoin to ETH to altcoins to mid cap to small cap. Like, that's bullshit. It's called, I think the account on Twitter is Secrets of Crypto or something like that. And it wasn't bad. It was really good alpha for where I was at, right? Because I wasn't reading charts like I am now. And, you know, it's, you know, I was just doing my best. And I was trying to wrap my mind around it and how to, you know, take advantage of all of that. I mean, you can read Secrets of Crypto, I believe it's called. Here, let's just check it out really quickly. Since I'm talking about it, yeah? I believe it's called Secrets of Crypto. But it's like, you know, you can tell the guy's doing his best, and the guy, I'm assuming it's a guy. Most of us in crypto are guys. There are a few females, but most of us are guys. Okay, so let's just, I think it's called Secrets of Crypto. Let's fix the screen real quick. Secrets of Crypto, I believe. Yeah, Secrets of Crypto. So, yeah, he has these charts, and they're really popular. I'm sure you've seen these before. But he basically said, like, you know, phase 1, flow of money moves into Bitcoin, and then Ethereum, and then large caps, and then phase 4. All. If you follow this, you're going to miss out. Because it's going to happen so fast, and it's more simultaneous than this is. This is an approximation. But if you're reading charts, if you're chart literate, you know that this is a rough estimation of what actually happens. But yeah, it's interesting, to say the least. It's interesting, and you know, the guy's doing his best, and I think he's done quite well. And he has some other good information on his channel or whatever, on his account. So anyway, that was what I was referring to. So on the Arweave, it's kind of still in its, well, it's not kind of, it's still in its bear market accumulation. Right here. So this is exactly what you can see with some other altcoins, where you have yet to break this main resistance right here, and you're under it. But when you do, that's when you get a few 100% pumps. It's hard to generalize. Everything's going to be a little different. Audio is a small cap altcoin, but it's already no, it's still kind of underneath. It's still underneath this main resistance you see here. Okay, it's still underneath its main resistance. Blur is a new token, and yes, it's under a little resistance, but it's super volatile, so it's going to put in high gains even now. So if you wait and you try to do that kind of waterfall of investment from large caps to small caps, you're gonna miss the meat of these moves. And the key, as I always say, is you invest low, and that's where you get the gains. If you do the math, the difference between investing in something at $1 versus $5 is basically you're cutting your gains in 5. I know it doesn't seem like a lot, but That's a massive, 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 massive difference. So you don't want to, you don't want to think in terms of, I'm going to do this later. Because the trend's already established. So technically, there's no reason not to. Bonk, we talked about this. You're probably going to jump up to this area, consolidate, then finally break. Dent, this is another low cap altcoin. Close to its resistance, about here, but again, it's beneath it. Bitcoin's already broken it. Dodo, same thing. That resistance is up here. It's below it. But it's on its way. Dogecoin, same. It's below this main resistance, but it's on its way. Polkadot. This is a little closer. That resistance is here, but it's still underneath that main resistance. DYDX, close, but also beneath it. Yeah, it's right here. Ethereum, so this is kind of like Bitcoin. It's just broken its main resistance, and well, I drew that a little low, but I think you can see it. It's about here, and it's in the process of retesting that. So don't be surprised if this kind of takes a little time to flip that resistance into support before a massive breakout. Chainlink, we talked about. You can see the RS flip happening at the midline. Essentially, this was your previous resistance. You broke down, you break up, you retest it as support, and you continue. Okay, but still, it's under the main resistance, or it's still in that region of bear market accumulation. So, don't expect fireworks from a lot of these altcoins until they leave these main areas of resistance. But that's going to happen quickly, relatively quickly, faster than you think. This is why like the whole secrets of crypto, it's great for beginners. It seems like, the key to the game, but really the key to the game is charting whatever asset you want to trade, and you have a clear picture as to what you should expect or what you can expect. Again, this is below main resistance. Got to break this, retest it. So this is Litentry. This is another small cap altcoin. You have Litecoin. This was doing really, really well. It was front running the market, but it's a little behind Bitcoin right now, but it's fine. It's below that main resistance. MOVR. This is another small cap altcoin, and it actually has broken most of the main resistances. The main resistances are here. This was the retest of such main resistance. This is your wave 3. You actually don't have much here. So if something like this moves now, don't be surprised, because although you have this, that's not resistance. This is not resistance. Like the main resistance was right here. So in MOVR, you see, like that's my point. If you chart it, you can see the difference. Not all altcoins are at the same stage of their development in the bull market, but this is clearly already in what seems to be a wave 3. This took about the same time as this, so this is likely a wave 1, wave 2 situation. You're likely in wave 3. Don't play with wave 3. It's going to go fast, furiously, and it's not something you want to trade in and out of. This is really the secret. Once you know where you're at in the market, you trade it accordingly. Don't try to trade waves. Don't try to trade impulsive waves, high time frame impulsive waves. I guess that's the takeaway. I learned that the hard way, because you can try, but you will lose money. You'll end up losing money, and the people who buy on spot and don't know shit about charts, don't know shit about crypto, they just bought on spot because their aunt, they bought it for their aunt or whatever, a family member. They'll out trade you because they just didn't do anything. The secret to the bull market is being hands off. Let the market work for you. You only work during those accumulation and distribution areas. I'm talking high time frame, all right? If you want to maximize gains. Is it possible to maximize gains, further maximize gains by trading in and out during a bull market? Yes, but it's improbable. It's unlikely that anybody is going to beat anybody by trading in and out of this market. I don't care if you're the best trader. You literally don't sleep. You can't sleep because the moves happen too fast and there are too many of them. Do you see what I mean? This isn't the sideways accumulation market. And this is what separates, I think, the okay traders from the best traders. The best traders recognize the different seasons or phases of the market and they adjust to those phases to, maximize their profits. So Harmony, same thing. You're below this main resistance, but, you should get to it relatively soon. RSR, you're under the midline of your accumulation channel. Once you break this, you retest it, you head to the top of your channel. Synthetics is kind of like Moon River. It is above all main resistances, and you can tell if you've been watching it, it's moving really fast. Let's try that again. This was the main resistance. Broken, flipped, wave 1, wave 2. This is wave 3. There are no resistances here. There are no resistances. So, Moon River, this is Sand. Did I say synthetic? Sand, Moon River, expect them to go, right? If you were to, expect them to follow that narrative by Secrets of Crypto, you would miss out. Sandbox is going. And that's after being in a 250-day accumulation channel that was broken to the upside, retested as support. It's gone. Okay, Shiba Inu, you can see it's close. It's getting close to the top of its channel. Okay, and once it heads to the top of this channel, it just has this resistance to break. Break, retest, and then continue to the upside. Okay, Synthetics is the one that really is going. And you can see that. Kind of like Bitcoin, kind of like Ethereum, if not even more advanced. Synthetics is an altcoin. It's a lower cap, much lower cap altcoin. And this is, again, emphasizing or reiterating my point earlier. Secrets of Crypto, great alpha, good idea, nice charts. But if you wanted to trade Synthetics and you thought that because it's a small cap altcoin, it's not going to run before Ethereum and Bitcoin, you would be mistaken because it's actually front running them. You can see it in the charts. This is why we learn to read. You can see it put in 5 waves up and 3 waves down. Most likely a wave 1, wave 2 situation, just judging by the time it took for these 2 waves to form. And having bounced off of that midline, retested this resistance. Retested this resistance as support. So basically you put in a W pattern, went up, came down, retested it as support, and you're gone. Look, you're currently in up only price action. You're putting it, you put a crazy candle in. This 4 hourly candle right here, as you can see, was a 40% candle. It's a fucking 40% candle. You put a 40% candle in on the 4 hourly time frame, you get, and that was like yesterday, I believe. You're basically doing what Bitcoin and Ethereum are doing, except you're ahead. So remember I said Bitcoin and Ethereum are likely to just consolidate a little bit. Let's jump into the smaller time frames to see what this looks like. So you can see this. It's a nice tight consolidation. This is what you see in bullish patterns. And also bearish impulsive patterns. You see nice tight consolidations when it's really strong, when the trend is really strong. So you see here, this is a W, X, Y. This is a double 3. And you did basically what we're expecting to do. You broke resistance, you're retesting it as support. Goodbye. Synthetics, if you thought it was going before, wait until it starts going again, because it literally just flipped the most important resistance as support. Let's go back on the higher time frames and just have a look. Synthetics is about to kiss the 300-day channel of accumulation goodbye. Okay? 300 days of accumulation, 300 days of a cause, 300 days of basically collecting buy pressure and releasing it. So synthetics is about to go, and yes, judging by its chart, it's highly probable that synthetics front run Bitcoin and Ethereum, and it go further and faster. Okay? Further, obviously, because it's a lower market cap, but faster because you can see it's ahead in its progression. This flat correction that's lasted now about 30 hours, right? 32 hours, something like that. 28 to 32 hours. This is about done. So we said Bitcoin, judging by the DXY, is likely to take about 12 hours in this area, retesting 25K as support before going. That's almost exactly what you saw here. Well, not exactly, but similar, no? Let's see. Let's see. Now, I'll get to Bitcoin in a second. Let me just finish with the altcoins. So Rachit says, can you cover GMT and AGIX also? And what about Bonk? Yeah, we can do all those. Bonk, I just did. Bonk is bullish. Everything's bullish. We're in a bull market. Just buy. If you're buying spot, just buy. You don't worry about it. You know, we're not at the point yet where you have to worry about drawdowns, like severe drawdowns, because we're just getting started. So generally speaking, if you like it, buy it. This is the best thing about. There's very few times in price action where you can say that. If you like it, buy it. Because we're so bullish and we're in a bull market. So if you like it, buy it, and we just got started. So you don't have to worry about severe drawdown. Like, dude, you just maybe buy the top of wave 1 or whatever. No. If you like it, buy it. If you're buying spot. If you're trading on leverage, that's a different story. I can't help you there because it really depends on so many things. So many things. But yeah, so that's synthetics. And Bonk, like we said, we'll go over it in a second again. But Telcoin's also breaking this resistance sooner than later. Okay, you can see, kind of like Bitcoin and Ethereum, you're at that level. Okay, so Telcoin's a smaller cap altcoin, and it's at the level of resistance, about to break it. Actually, if you drew this more carefully, one could draw it like this. Okay, so you're at an important level of resistance, right? Remember this triangle, this large triangle, or not triangle, this large channel, right? It's a channel here. It's like 600-day channel has been retested as support, okay? And the triangle that I said was this triangle here. So you've been putting in a massive triangle, and this is basically the end of this triangle right there. So Telcoin's going to break out sooner than later. It's above all its major resistances. So yeah, you do not want to mess around and wait for a lot of these assets that can go any moment now. Any moment. Because you can see this on the smaller time frames. Let's go back to the 4-hourly. You're on top of this 600 days of resistance, turning it into support in what looks like a double 3, a WXY. You can see that. W, X, Y. Consolidation reversal, go. You look like you're putting in a wave 1, wave 2. Like this this looks like it's going sooner than later. Okay, don't be surprised if Telcoin started breaking out sooner than later. Okay, Tron's also one of those. That, see, again, there's so many examples, and this is the massive triangle, 600-day triangle, right? If you've been following this page or this channel, you know that I've been tracking this for some time. A very, very easy, clean, pop out, retest, right? And now you're perfectly impulsive, and you're at that final resistance level right here. And once it's finished, you're going. So a lot of these altcoins, Tron, Telcoin, Synthetics, Moonriver, they are likely, not just, they're likely to front run Bitcoin and Ethereum. So don't be fooled. VeChain's under its resistance. It's still got to get to the top of this channel, retest it, and then break. XRP at the top of its massive bull flag. Okay, this is the flag. So XRP is at the top of the channel. It's accumulating, or it is consolidating at the top of the channel, consolidating at resistance for a breakout. Okay, Zilliqa. This is another one that, and one of the reasons I have this in my portfolio is because every single time I was tracking pumps or my general watch list, I would see that this was one of those assets that would front run the market. And here again, you have Zilliqa having retested this falling channel as support, popped up and out, and essentially now about to break the large resistance. And I don't think that this will take too much time. Okay, even though it's not at the level of resistance, I wouldn't be surprised if Zilliqa did this sooner than later. It's just used to front running entire trends. Okay, now back to Bitcoin, and you can see we're putting in a substantial retracement here of this level. Okay, but this is something to be expected. Every single time you break significant resistance, you turn it into support. That's exactly what's happening here. And I do maintain that this is, let's see. Let me measure something. Okay. Okay, let's measure the time. Three hours and 30 minutes. Okay, so this seems like it's not a wave 1, wave 2 situation. This seems like a larger retracement. Okay, this seems like a larger retracement where you have an initial break of structure targeting wave 4 of the previous trend. Okay, this looks like wave 8 targeting wave 4 of the previous trend. You might get something like this. Okay, so it may come a little deeper than we initially thought. Let's go on the 4-hourly time frame real quick. So let's draw that out first. Let's go back on the small time frame. Okay, and this wouldn't surprise us. This because every time you break significant resistance, and it wasn't just 25 that was significant resistance. We had resistance all the way down to 24.6, I think, right? So don't be surprised if something like this happens. Let's see how far it would go. Okay, yeah. something like this. Okay, and this is just this is just a projection, a trading thesis. Am I going to trade it short? Hell no, because this may not even be what happens. All I want to do is protect against downside risk, make sure that my stops and liquidation points are way behind this phi ratio. So I have 26 hours about on the way up. And so that would take me to about 26 hours, about 12 a.m. Guys, this coincides with our analysis of, wait, is that correct? Sorry, let me do that again. Let me do it again. So about 1 day, 2 hours. And this. Okay. Maybe something like this. Don't be surprised if something like this happens. Don't be surprised if something like this happens. Okay, that would make sense. Why would it make sense? So Wednesday morning, for us to still be in correction. Why would it make sense? It's because you're coming and you've broken all of this resistance and you never retested it as support. So you would essentially be, let's go on a higher time frame. You would essentially be retesting all of this resistance right here as support in this move, which would take you, which would give you a nice ABC flat correction or zigzag or whatever the form. It would take, until tomorrow morning. So don't be surprised because this took some doing. Don't expect for us to just continue up. If this is a tried and true impulse and we're breaking this level, we have to retest it as support. So if you're an adept, savvy trader, you're going to protect against this downside risk. Don't be surprised if that's what happens. But you're still going to end up way higher than you started. Okay, way higher than you started. Tuesday, let's see, Tuesday. Yep, you're gonna end up way higher than you started, at least on Monday, right? But don't be surprised if that happens. And that's kind of the time frame. Just assuming that this is a wave 1, wave 2 situation, and then you'd be retesting specifically this region and this region. Yeah. All right, so that is the development of that. Okay, so let's look at GMT and AGIX for Rucksheet. Okay, let's go over Bonk really quickly again, if you missed it. Okay, so Bonk is... But yeah, that's Bitcoin. Don't be surprised if other assets are doing other things. Not everything is going to follow Bitcoin lockstep, because in a bull market, altcoins have their own agenda. In a bear market, altcoins have their own agenda. When you're talking about impulse, you're talking about market flowing in and out of the market, in and out of the entire crypto market, and you're talking about things with a lower market cap that are more volatile being affected more than the higher market cap, less volatile assets. So even if Bitcoin is putting in a retracement, a flat correction for the next what did it say? Until Wednesday, 10:30. So that's like for the next like 20 hours. Is it 20 hours or 12? Yeah, 20 hours or so. Don't be surprised if some of these altcoins do their little consolidation and just start going. Okay, so specifically Bonk for Rakshit, this is clearly an uptrend. Okay, don't have to be Wyckoff to be able, or Elliott to be able to read that. This is, and it's not a corrective uptrend in that your base is solid, and this looks like a wave 1, wave 2 situation, wave 3, wave 4 situation. Looks like you're going for wave 5. You're going to break this, retest this as support, and then move on. That's what it looks like to me on the smaller time frame for Bonk. But again, this is such a low cap altcoin. Buying anywhere here, you're buying the bottom. If you're buying, and I don't think you can even trade this on leverage. I think it's way too volatile. I wouldn't ever trade this on leverage. Way too volatile. Just buy it on spot. You don't need to. These are the things that you don't need to buy on leverage because they're so volatile. They're going to give you the multiples you seek. So I think that's what you're doing. Maybe you even come up to here before that retest like this, because this is clearly resistance. You were holding this for quite some time, so you're likely to engage in this area as resistance, right? Given that it was support for so long. So that's Bonk. Okay. Next, we can look at GMT and AGIX. So that is not on my watch list. So let's go to my general watch list and see if we have it. GMT or AGIX first. No, I don't have AGIX. Let's add it. Let's just add the BUSD, no? Okay, here's another example of an altcoin that doesn't care about these market narratives. You're clearly, you've been an impulse. Okay, so this one's actually interesting. If you look, this is clearly your accumulation. Okay, and on the 1st of January, like most assets, you experienced an uptrend. But here, different than a lot of other assets, you didn't have an uptrend that kind of got stuck in their accumulation zone. Here, you had an uptrend that just went. So this has been in its bull market ever since, and it's broken its resistances really early. Okay, so actually I would be careful about this because you've been putting in a solid bull market ever since. So this is way ahead of most other assets. Way ahead. So it's likely that this asset, AGIX, finish way before other assets. So I would be careful. This is one of those that I would look for top signals on sooner than later. Okay, sooner than later. You're not going to get much in terms of good data with these indicators because there's not enough market data. But you're in price discovery. So I think the best thing to do would be to try to count waves. Try to do your best counting waves. Let's see. Okay, so what I can tell you is this. In the beginning, you got a series of wave 1 and wave 2s. You're building the wave. You're building your impulse on a larger time frame. This, whatever it is a wave 4, quintessential wave 4. You only get triangles in wave 4. We know that from our studies in Elliott wave theory. So that is a wave 4. Is that the wave 4? What wave 4? What degree? We're not exactly sure, but it's a wave 4. With a high degree of probability, we can say that. If this is a wave 1, this is a wave 3, this is a wave 4, this is a wave 5, I'm expecting now some sort of move retracing on this entire pattern, on this entire run. So I'm actually, this is something I'm looking for actively on this asset. I'm actively looking for the retracement. Okay, I've had specifically 32 days up. So let's see how long this retracement has lasted. So was that it? It's too shallow. Okay, let's measure that again. Let's measure this again. Okay, we might have something here. We might have some good news here. Okay, let's say that this actually starts over here. I'm reading. Okay, so this actually, instead of a series of wave 1s, you can say that this was your consolidation reversal pattern. So big A, big B, small B, pivot. So I'm actually reading the start of my impulse right here, and this is part of my accumulation reversal. So I'm going to pull my fibs again, but from here instead. Let's try that. Okay, this to me does not look like a wave 2 retracement. It looks like another wave 4 retracement. So I am looking for higher. Okay, let's say for AGIX I'm looking for higher, but I'm on guard. I don't have enough market data to use my momentum indicators to tell me where it's likely that I can get a top. I'm in price discovery. Only thing I have to do, or the only thing I have to go off of, is my price action. So I'm going to try my best to read these Elliott waves. If I see this as a wave 4, if I see this as another wave 4 of another degree, maybe a larger degree, right? This is a smaller degree wave 4. I'm looking for higher, but I'm very careful. When I get to a higher level, I want to watch the nature of these corrections. But I'm looking for higher, and I'm basically going to ride this with the rest of the bull market, with the rest of the crypto markets. But what I would do personally, if I was invested in this, I would add a note. And I would set alarms. Every time this went up, I'd be very careful and notice how it went up, how it started consolidating, all that stuff. Because I need more information to say this is going to be a top or whatever. But for now, as far as I know, given this analysis, we're going up further. Very high degree of probability. I am not looking for lower yet, but I won't be surprised if, of all of the assets, on the market, this is one of the first that starts looking for lower. Okay, and I'm assuming this is all assuming that this chart is the most has the most data. So I'm just gonna make that assumption. But yeah, so that's AGIX. All right, what's the other one? GMT. One second, let me look at something. One sec. Okay, cool. So GMT, right? We're looking at GMT. GMT. Do I have it? Let's arrange it alphabetically. GMT, Greenwich Mean Time or Meridian Time. GMT. Okay, again, let's take the Binance chart. Okay, let's zoom out and get a synoptic view. Auto. Okay, this looks like something that's relatively new. Some kind of launch, right? Recent launch, and then a correction, but it's a natural correction. People selling off regularly. It's not like a massive dump. So first glance, this is a zigzag of some sort. A, B, C. Yeah. So this was the bear market right here. Bear market and a subsequent accumulation. Now I'm reading the reversal. So let's do that together. I'm doing it in my head, but let me do that aloud. Okay. Let's see. Okay, so this is what I want to do here. I'm reading 2 degrees of AB basing in a pivot. Orthodox low. It's not the orthodox low. Orthodox low of this A wave, okay? Or W wave, or whatever you want to call it. No, what am I talking about? This is our zigzag, right? A, B, and then I think you got a ending diagonal. 1, 2, 3, 1, 2, 3, 1, 2, 3. Let's see. A, B, 1, 2, 3. 3, 4, 5. No, I was right the first time. I think 4, 5. Yeah. Okay. So this is A, B, C. This is a zigzag, and then this is 1, 2, 3. Right, 1, 2, 3, and then 1, 2, 3, 4. It's a complex, and then 5. Okay, this was the end. So quite recently, okay? That's how I'm counting this. Okay, let's just put this in real quick. So I think that this was a massive correction. Looked something like this. This is the orthodox high for my zigzag A, B, and then C down here. Okay, so actually, according to my count, my analysis, this GMT is still putting in its corrective consolidation, or sorry, it's corrective consolidation or accumulation. So this is, let me look at it first before saying it. Okay, this is A wave, and this is a B wave. This is down to the 786. So this is big A, big B. So this, it's like the opposite. It's interesting, really interesting. Really good examples, because this is proof that you can't just assume everything's doing the same thing. All right, it's probably like right here. Okay, this is proof you can't assume everything's doing the same thing. We just looked at AGIX. AGIX is way ahead of everything else. It's a small cap altcoin, and it's way ahead of everything else. I don't know if it's medium cap or small cap, but it's an altcoin, okay? So it's not Bitcoin, it's not Ethereum. Way ahead. So you're looking literally for tops. It's been pumping for a month straight. Whereas here in GMT, it's way behind everything else. GMT, instead of having gone through the 300 days, 250 to 300 days of accumulation that most other assets went through, GMT was putting in a fresh low on December 31st. Okay? Not in the context of an accumulation. This is not an accumulation. This is a wicked, heinous ending diagonal. An ending diagonal in Elliott wave theory is a 3-3-3-3-3. Okay, it's essentially just an impulse wave that you get in wave C and wave 5 sometimes, and I think wave X. No. Wave Y. Wave C, wave 5, and wave Y. Okay? So this is what we're seeing here. And now you have to start counting accumulation reversal patterns. Almost as if, what happened in May. So this right here was May 12th, 2022 for most other assets. This didn't happen until December 30th. This is an initial break of structure right here, as I read it. So this is a flat correction to the upside. We know it's a flat correction because the counter is a flat correction in the other direction, targeting the 786. So if I'm counting this is big A, this is big B. So if I'm trading GMT, I'm not going to expect for it to do what other things are doing, because I know, based off of what I'm reading, is that it's still accumulating. Now, the accumulation can take on so many forms, and it can be faster than other accumulations. Doesn't mean that because everything else took 250 days to accumulate, this is also going to take 250 days. That's the tricky part about accumulation. There is no set time. It can look so many different ways. It could be zigzags, it could be flat corrections, it could be whatever. Here, I would just say, be careful. You're not in pure impulse, and it can look... Let me zoom into this. It's tricky. But chances are this isn't pure impulse. So my takeaway, if I was trading this, don't be taken aware, or don't be shocked to see retracements beyond the 618. Because, when we're in impulse, we can expect any retracement to respect the phi ratio, the 0.618 Fibonacci retracement level. Okay? But when we're in correction, when we're in accumulation, when we're in distribution, we're in corrective price mode. And we can have 100% retracements. We can have 161.8% retracements. So don't be taken aback by that, because this, as I read it, is a small a. You still need a small b. I don't know what this is. If it's a zigzag, then small b looks like this. If the zigzag, if this is a flat correction, then small b is going to look like this. At the very least, it can look like that too. So I would just say be careful with GMT in terms of what it prints. Don't be too aggressive in any leverage moves with this until such time as you get a very clear break, a very clear impulsive break of resistance, which would probably be, let's zoom out a little more. It's probably be like this right here. Even if you're still in correction, this is how I would trade this. I would wait, because I would wait until this resistance is broken right here, because this resistance is massive for this for this asset. If and when GMT breaks this, retests it, then I'm trading it as everything else. Even if it wants to put in some sort of corrective crap, I know that at least I'm done with all this. And it's likely that I'm going to go. Does that make sense? I this is an advanced kind of read, because you have a a zigzag with an ending diagonal, and how do you trade this? How do you enter along here? I would say you can do it if you're on spot. Fuck it, just do it. Who cares? You're at the bottom of a market. If you're on spot, just no brainer. Just now is as good a time as any. If you're on leverage, then you got to be careful, because you can't survive a corrective drawdown, or you're unlikely to survive a corrective drawdown. And so this is why I'm talking in those ways. I don't know how you're trading this or what you're trading, but yeah, if you're on leverage, be careful. Wait until it breaks major resistance, retest it as support, and then you can get into those high leverage plays. And you can protect better against a drawdown. If you're on spot, who cares? I would just, I throw all my excess margin into bonk, because I don't care. I know that I'm just waiting. Even if I'm drawn down upon, I don't lose my position because it's spot. It's easy. So Akansha says, could you look at the chart too along with Phantom? Yeah, let's look at Phantom. And then Belmondo says check out SKL. So we'll check those out. So let's go to Phantom. Okay, so Phantom has put in very likely what is a wave 1, wave 2 situation. I think this is quite clear. You have this rounded bottom, inverse head and shoulders, right? Reversal pattern that you broke out of, and then you came back to retest it. And that's the retest. At the same time, if you're looking at it in terms of Elliott wave theory, you have 5 waves up, 3 waves down. The time it took to go up 5 waves is about the same time it took to go down 3 waves. So that's a wave 1, wave 2 situation. This is wave 3, your most impulsive, your most violent, your longest wave. And you're about to break out, and the final boss is around here, okay? So Phantom is in a good place, and once it gets above this area here around 60 cents, you can expect fireworks. So that's Phantom. Belmondo says SKL. So what's SKL? Let's look and find it, because I don't think I've ever heard of it. Okay. SKL. Ooh, what'd I do? Okay, here we go. I'm reading. Okay, first things first. This is all corrective. No impulses to be seen here. Okay, at least until this point. So, I know that in its price history, this asset has never enjoyed pure impulse. It may still not be in pure impulse, but I'm looking at this as a large range, okay? And this is the bottom of the range, and this is the top of the range. If we matriculate to the top of the range, I don't know that it will be in pure impulse, right? We have cases in the past, Litecoin, XRP, of assets that have gone through bull markets where, you know, the rest of the market was bullish, the rest of the market was impulsive, but they just made higher highs in correction. So don't discount that. Every time I see an example like this, what I'll say is this. If you get to the top of this range and you start acting funny and you show weakness, then that's your cue to take profits. Because whether you like it or not, you're going to see a reaction there. Question is that reaction going to be a consolidation at resistance, or is it going to be a straight out rejection for more of the same stuff, right? And what is this, by the way? And let me just address that. When you see these ranges, you look at Litecoin, you look at XRP, they're just large accumulation ranges. This is why I'm so bullish on Litecoin and XRP, is because they spent years, thousands of days in these such ranges where everything else was going up impulsively. They were going essentially sideways, stuck within the bounds of these larger accumulation ranges. So something like SKL, if I was trading this, I'm buying, I'm a buyer down here. If I'm on spot, I'm closing my eyes and I'm buying. If I'm on spot, I'm closing my eyes and I'm buying anything. It doesn't matter if it's like ass coin or poo coin or whatever. I'm buying it because we're in a bull market, and yeah, obviously I'm going to look at the chart, but like more often than not, likely everything's going to go up. Even things that don't deserve to go up are going to go up. That's a definition of a bull market. However, I'm going to use my chart to determine what to expect with a high degree of probability in terms of upwards momentum. And here I'm going to be very, very careful about 70 cents. Just because this is corrective, I don't know, and I can't assume that this is going to break and go into impulse. Okay, so I'm going to look at this. I'm going to look at the character of this motion, of this wave. If it starts going in a straight line like this, with a high degree of probability, I know that once we hit this, we're gonna put in some consolidation there, and I'm still buying, or I'm just gonna chill, you know, and this is gonna break out like that. But if it's kind of like some kind of matriculation, looks like this, I'm like, ooh, I don't know. Once we get here, I think we're gonna run out of steam, put in some distribution, and continue this larger channel of correction. So that's my take on it on the higher time frame. On the small time frame, jumping down into the 4 hourly, I want to say this is a wave 1, wave 2 situation. Judging by the time it took for us to go up in 5, which is about 40 days, and then to go down in 3, very clearly, it's about 30 days. Okay, you know what? Let me see. Hold up. Let me try that again from here. $35. Yeah, this is corrective. At least it is at this point. Okay? At this point in time, it's likely that this is a zigzag, an A wave, B wave. So this is likely going to be the impulse right here. Okay? This is likely to be the impulse, which is a good sign for potentially breaking that upper resistance. Because, you know, by definition, this is wave A, this is wave B, this has to be wave C, this has to be purely impulsive. So that's what I'm waiting for. And now I think we've started that. So jumping into smaller time frames, I think this is wave 1 of your impulse. And again, you know, the deduction is made based off of the time, given that, you know, Elliott wave principle tells us that wave 1 and wave 2 are comparable in time and in price. We can just look at the time it took for wave 1 and time it took for wave 2. They should be comparable, usually 1-on-1. If there's too much discrepancy there, it's unlikely that you have a wave 1, wave 2 situation. That's why I'm saying wave A, wave B in a zigzag, and the zigzag looks like a wave 2 because the wave 2 respects, or the B wave of the zigzag respects the 0.5, comes to at least the 0.5, and retraces to a maximum of the 618, and I think that's what we have here. Let me just double check. I didn't check it, I just eyeballed it, but I believe that we came to at least the 0.5. And yes, we did. We're in the golden pocket here. Okay, so yeah, I believe that you're putting in your first purely impulsive wave here. Right? A wave 1, wave, I don't know what this is. Maybe this is wave 1, wave 2, wave 3, wave 4. Yeah, this is your first purely impulsive wave. And what's happening now is this inverse head and shoulders broke out, is being retested. Maybe it's going to be retested more like this, more likely than not. It's going to have a little bit of a lengthy retest before going up. So this is a great buy point. Financial advice. I'm going to start saying financial advice. That's financial advice. This is a good entry point because it looks like it's going to be reaccumulation on top of a previous resistance that's now being flipped into support. So this consolidation is made for buying, in my estimation. Okay, so that is SKL. I don't even know what that stands for. Sounds like a power tool. Akanksha says fetch AI. So let's look at fetch AI. Fetch. I think I have that here. Fetch. Okay. So let's just go on the higher time frame. I feel like I've looked at this before. Yeah, I have. It's marked up. Yeah, so fetch AI is another one. I would say any of these assets that were previously very clearly in some sort of corrective pattern, right? This is clearly corrective. There's nothing impulsive. Hold up. Yeah, there's nothing impulsive about this. This is clearly corrective. But good thing about this is this. This is likely very odd looking, but yes, super odd looking. Oh, you know what? Here's what I'm reading. Big A, big B, small a, small b, pivot, impulse. I'm reading 2 degrees of AB basing in a pivot. This is not 5 waves up, 3 waves down. Nope. This is 5 waves up, 3 waves down. 5 waves up, and then you have 3 waves down to this, making this, so basically, you see this sometimes. Big A, big B, small a, small b. It's 2 degrees of AB basing. That's what this is. Almost is high degree of probability that's the correct read here. And then this is your pivot right here. This is your breakout. So I was going to say, I'm looking at this as another channel of resistance. Very likely that, yes, you find some resistance here, but you accumulate here or you reaccumulate here. You put in some sort of consolidation at resistance, and you break out. And Fetch AI actually proves itself to be in pure impulse. So yes, I would treat any consolidation at this point as a really good area for reaccumulation, re-entry, whatever you want. Yeah, so I wouldn't be surprised if you did this, you came up here, you did a little more, right? And then you eventually break up. But you're in pure impulse here, very likely. And I think that's what I meant by this resistance here, right? I think I put that in before, saying that if you just look at it in terms of pattern analysis, you broke the resistance. This is an old resistance, by the way, as far as crypto goes. Yeah, this is almost a 400-day resistance that you broke. 400-day resistance, retested as support. That's your breakout. You're in pure impulse right here. If you get to this, I'll say this. This is the last thing I'll say about Fetch AI. Once you get to this area right here, you're likely to experience some resistance. Now, I would not be surprised if that resistance took the form of that retracement. Actually, I'd go a little deeper. I would watch for that to happen, for you to have put in this. This is clearly a wave 1, wave 2 situation right here. This is likely, we can measure it, likely wave 3, wave 4. And then put in wave 5. Okay, would not be surprised if that was the count. And so what you were doing is putting in, once you get to this resistance, putting in a move like this. That wouldn't surprise me. And again, this all would take just as long as it took to get up. So, damn, that's a lot. I don't know. That's 117 days. I guess this has been going up for quite some time, man. Since December 11th. Yeah. Okay, so this, yeah, it is what it is. For Fetch, I would start looking for tops soon. It's not the ultimate top, but it is a local top. Don't be surprised if something like this happens, because this right here is undeniably going to be some sort of resistance where the price is likely to react off of. Very, very likely. Very likely. And you've been going for quite some time, and usually what happens at a significant resistance is you put in your corrections, and the likely correction is you're going to put in that 3-wave move, and that's going to be. So this is a good example again of an altcoin that's kind of off the same. It's not on the same exact calendar. It's not doing exactly the same thing as the rest of the market or as Bitcoin. It's kind of doing its own thing, but eventually it gets to the same place, right? But I think you put in 5 waves here. I think you put 3 waves down. So if you haven't bought in already, I don't know if I'm buying here, to be honest, because you never want to buy wave 4. It's too risky. I think I talked about this yesterday, and it wasn't Steve Sinclair. I think it was somebody at Elliott Wave International that I learned this from. But wave 1 is the disbelief. Most people don't believe that the trend has changed. Wave 2 is, haha, I told you, it's same old stuff. It's the previous trend is still in force. And then wave 3 is, oh, I guess you were right. The trend has changed. Most market participants do realize the change in trend. Wave 4 is the poor traders, the, chart illiterate, non-savvy market participants. They only start getting in at that time, unfortunately. And then actually during this same time, your really big whales, your really smart market savvy participants start taking profit. Actually, they start taking profit, and they're taking profit all the way up to wave 5, and then they take profit more at wave B, and then in the pivot, and then they reaccumulate here. So I would say be careful buying at wave 4. It's likely that we're in some sort of wave 4 for this fetch AI. It just seems too hot, too overheated. I would, if you haven't gotten in already, I wouldn't get in now. And then I would just wait until these areas, if you want to take profit. Now, that's a big if, because you can, if you're on spot and you got nothing to do, or you don't have that many positions, yeah, fine. I would take some profit at this point, and then buy again more when you do your drawdown. And I think this is likely an area of support. So do you see? You have some symmetry. And symmetry on the charts is not something to be treated lightly. The chart loves aesthetic balance. I have that in my notes. I've noticed that. I'm like, oh wow, every single time I could have noticed that if I just drew this, in a symmetrical, aesthetically pleasing way. So anyway, that's Fetch AI. All right, guys. If there's nothing else, I think we're gonna call it a stream. Let's see Bitcoin, what it's been doing. It's been a while. $24,600. That's around where we were saying is. Looks like this is a straight zigzag. Looks like, well, to be honest, you may still put something like this in. But you got a big bounce here. It's to be expected. You're on support. Yeah, I think this is a W. So I wouldn't say, so based off of what we have now, I would say at the very least we see a double 3. Let's say something like this. something like this, maybe. Or, you know, it'd be a triangle or something, I don't know. But anyway, you're finding support here. All right, guys, that's it for me. I hope this was helpful. I hope this was useful. Akanksha says, have been holding since the bottom. It's for long-term hold. Yeah, if fetch is a long-term hold, then that retracement of maximum 61.8 is not, I mean, look, I always think in terms of, okay, I could sell here and then buy back, but do I actually, is it worth it? Yeah, maybe I can make a little more money, but like, is it worth the stress? I think in terms of stress sometimes. Like, I'd rather sometimes experience the drawdown, let it go, if it's going to save me a lot of stress. It's going to save me a lot of time and, you know, just work, you know, because I just have a lot of things to do. Like, my job is very demanding. It takes a lot of concentration. It takes a lot of investment, time and energy investment. So sometimes it's like, okay, I know with a high degree of probability that's happening, but I don't care. So if that's the case, then just leave it. Because it's just going to draw down maximum 61.8%. And after which point, it's going back up anyway. Because it's in pure impulse. That's just wave 2. So whatever, you know? But yeah, I think it's likely that we experience wave 2. And look, the other thing about leaving it is, if you're wrong, and it's more bullish than you think, then there you go. You didn't sell too early. Because selling within an impulse is tricky, because then you have to get back in. And you have to figure out when it's going to bottom or something like that. And you don't want to get left behind, because that wave 3 is going to go fast. So you don't want to get left behind. That's the worst feeling ever. I remember doing it sometimes, like trying to be smarter than the average bear, sell wave 2, buy again for wave 3, and missing wave 3. That sucked. I did that on smaller time frames when I was scalping back in the day. In any case, yeah, if you're holding for the long-term bottom, then you're good. Just hold it if you want to hold it, and you know, it's easier that way. All right, guys, take care. See you tomorrow. Bye.